All right, good morning, everyone. We can start it more or less on time today. Let's keep going. All right, last night's session, U.S. markets is a bit wishy-washy. We obviously late in our session yesterday, we had some insiders within the ECB that essentially leaked to Bloomberg that the ECB today is apparently going to do 50 billion euros a month in asset-backed purchases, and they will do it until at least the end of 2016, which I think is, I would say, somewhat significantly more than what the market expected. That obviously led to an initial spike. We really rallied. We rallied pretty quickly and not that hard, but we rallied. You can see there in the beginning of the U.S. session that carried on a little bit. We were up kind of 10 or 12 points, and we came back down just on a drift, tested flatline. Looked a little bit shaky there for a while, and then kind of pushed back up into the close. This morning we're starting to see a little bit of follow through out of the S&P. We're seeing a few of the risk metrics that are starting to give us a little bit of risk on, maybe in some of the currencies like the yen and things like that, but still not a whole lot that the market's showing us at the moment. So I think for me, that release that came yesterday, I was actually expecting the market to do more one way or another, and we didn't get all that much. Anyway, we had a lot of stuff in terms of U.S. stock specific, and Netflix, which was out obviously the previous night, was up about, I think it was up 17, 18% or something like that yesterday, like 60 something dollars on the day. We had IBM, which traded soft. I mean, they were down on every segment of their business, was lower year over year. Surprised to me that only fell about 2.5% on the day, but. Yeah, we saw a lot of earnings come out after the bell, and so far, to me, the earnings picture in the States is still looking a little bit mixed. It's not very well defined at the moment. All right, moving on into Asia, we had Hang Seng in Shanghai and Aussie that were up a little bit. Nothing too exciting. Kind of following on the back of the States, up a little bit, maybe in hopes that what leaked yesterday was right, but everyone's still kind of trying to, I think, play it slowly until we get confirmation today. So that meeting today is obviously going to be massive. Like I said, we have very little leadership in Asia, so we're still going to in a kind of wait and see mode. One of our charts of interest, there's so many statistics that I've read recently that are really interesting, like this one about the S&P and the kind of place that we are at the moment. This is really interesting for obvious reasons, because the S&P has actually never been up 7 years in a row. Never. Throughout, that chart's going all the way back to 1874. We're looking at 150 years of statistics on the S&P, and we've never been up 7 years in a row. So we've obviously been up 6 years in a row now. Can we break a record this year? Well, one thing is that we are kind of in a place where we're having global quantitative easing at the moment. Maybe that's enough to get it done. I don't know. But bottom line is that we, the last time we were up 6 years in a row, we had an 18% price correction the following year, which you can see how long ago that was. I mean, that was all the way back in the early 1900s, in 1904. So there's another stat that I've seen recently as well, is that it was, the fact that the dividend yield for the S&P 500 is now above the 10-year yield in the U.S. On U.S. Treasuries. And I also don't think that if I'm not mistaken, I think the statistics show that there's never been a down year when that's been the case. So, there's some conflicting statistics there. I don't think that this is, that much of a sitter, but something interesting to look at nonetheless. Right. Corporate action today, we've got nothing here locally. We've got Verizon, Union Pacific, and Starbucks all out in the States. We look at market data on the day. Just ignore every single thing except for Mario Draghi. That's everything. We're going to see that with the main financing rate. He's going to be talking forever. There's going to be a lot that we're going to need to listen to around the commentary. The market can kind of make a big rip one way or another. It could be misleading. The first move might not always be the correct move. They could jump on the announcement, and then he could come out and say something that could be, the total opposite effect, 5 minutes later. So just keep that in mind until he's kind of at least halfway through his speech. The market is going to be volatile and it's going to be shaky. So just watch closely. Then we've got initial jobless claims later in the States along with some other data. But like I said, forget everything else. Today's all about the ECB. All right, let's get into the maps. The first thing that I wanted to look at today is just go through some of the retailers. I mean, yesterday was incredible. I'm kicking myself because if you guys were listening last week, one of the things that I was talking about and having a really good opportunity this year are a lot of the interest rate sensitives because of the fact that that we've had such a dramatic swing in interest rate expectations here. I mean, a lot of people are expecting a hike at this next meeting. Now, all of a sudden, some people, I don't think hardly anyone expects a hike, and it could be, pricing in cuts not too far into the future. You've got, we were trading at about 8.5 on the 10-year yield in South Africa only a month and a half, 2 months ago. We're at 7.30 now. So, that's a huge change in expectations. And just over that point, look here at growth point. This is one of the ones that we showed that we know that day when we were talking about having those kind of good opportunities. We also talked about ShopRite. I'm sorry, let me shorten that up a touch. We looked at this one, and I showed this one the day before yesterday, and it was kind of making a bit of a bull flag here, a descending triangle setup. We finally confirmed the proper breakout of that yesterday. Truworths, I actually want to show Truworths. I'm going to go out into, you know what, let me start here with a 1 year. And just kind of show you the recent consolidation. This swing here is incredible. We're 10% in 4 days through the bottom of this range up, and we actually made a new closing high out from the top of this range. I think you can call that a breakout. Obviously, didn't close up as high as that, but we've definitely been range bound here, and we closed out of this range, out of the top of this range yesterday. If you look at this on a 5-year, I kind of like this setup. Because you can look and you can see very clearly defined downtrend that we had been in since, call it, 2013. We entered into a bit of a downtrend, and we broke out of that downtrend maybe in November, and we put all that consolidation. So all that whole little consolidation I showed, we just broke out of. You can see it right there. Let's just draw that a little bit higher here. We use the wicks here, but you can see that we've broken out of that, and looks to me like we could just put in a nice consolidation on the back of this downtrend. So we broke out, we consolidated, and now we're pushing higher. I think we're set up to make another $10 move here on the upside. So just watch it closely. We had another stock yesterday in the retail sector, Woolworths, which also broke out to an all-time high. This is incredible. We broke out above 84. Any way you look at it, this thing's taking off. The target here is freaking high. I think you can throw the target up to $100. So this is, the retail, all the entire interest rate space has really just run so hard over the last few sessions. It kills me that I've really missed participation in that, but it is. All right, one that we're going to look at here, we look at Amplats. We talked about these platinums a couple days ago as well, and the fact that they might start to play catch up with some of the golds. There's what I would consider a huge level here at 390. We talked about if this thing could actually get its head up above. I think we pegged the level at about 360. I don't know where I got that from, but anyway, we talked about a breakout above that sort of level. We've run up here to 390. We tested that yesterday. If we get above 390 now I really think it's got real legs. Another one that we've been talking about has been Impalas. And Impalas, the level here I think was at 78. It's $78. You can see there a nice little level at 78. And this thing's also consolidated as well. We broke out above 78. We actually traded to 80 yesterday and closed back below that. I think that this thing's broken out and has maybe $8 upside in it. So I'd put the target here closer to 86, which is up around that sort of level. I think that's where our target is in Impalas, and I think it's hugely lagged the the gold sector, and and I think it does still have some room to run. The last one that I'm going to show is Tiger Brands. Tiger Brands also huge breakout yesterday. I think we showed this a few sessions ago and talked about the narrowing consolidation that we had seen here, and the fact that this thing was getting ready to make a nice move as well. So we've been on a lot of these. Unfortunately, missed a lot of the moves. I personally missed a lot of these moves, in some of these stocks. But we've been talking about them a lot. I think we've been pretty accurate with it in the morning call and our ideas for how these stocks are going to move. So really telling action right now out of the interest rate sensitive space, and I think that can continue for the near term, because I think that South Africa potentially has a hell of a lot of catch up to do in the interest rate space. And that's it for today, guys. Good luck out there.